Hello, everyone. Welcome to another weekly update and review. Today is October the 7th, and we're going to take a look at our performance over the last week, some trades that we put on, and what else is going on in the account. And to do that, we're going to start with the usual performance over the last week and then year to date. And looking at our net leg, we're up 0.07, basically flat for the week, and market is up slightly, 0.5%. That was a nice rally yesterday, and year to date we're up 1373, and the market is 1231. So we are pretty close to each other. And these are our graphs year to date. We are blue, and market is red here. We're pretty in line with the market. I would say we're a little bit more straight line, a little less volatility than the market is showing here. And then trading is a long-term endeavor, and you have to always take a look at the long picture. So this is from May of 22, so a year and a quarter, and you can see here that we're moving in the same direction as market, but we are doing better. And interesting thing to note, and this is how we actually make money long term, because we are moving in the same direction. When the market is going down, going up, we are going up as well, roughly at the same pace. But right here you can see this inflection point when the market turns down, and from here on, in the last couple of months, it's a downward slope. And during that same time, we're still maintaining an upward slope. So the way we're making money long term is we generally make money when the market is going up. We're making even more money comparing to the market, especially when the market is either flat or going down. And as long as it's not dropping down significantly in a short period of time, like COVID or 2008 or something, we are in a good shape. Now we have precautions for that, and if that happens, we have hedges in place and we have things to do. So I would like to also urge everyone that's watching or trying to do something similar. You can't look at the trade by itself. The trade, we call it one-to-one, is just a portion of the trading system. And whatever trading system you use, you have to have measures to prevent any large drawdowns or worse. So this main trade is very resilient and resistant on its own, but it's not enough in case the market pulls back strongly. And for that, we'll have our hedges on demand, and we have grind down hedges, and we'll talk about that as well. But just keep in mind that you have to look at the overall portfolio, especially when it comes to protection of the value and the net lick. So okay, so that's on that. We are let's take a look what we did this week. So as you know, anything that has a blank here, it means the trade is still going on. There is no profit or loss yet. And anything that has a value here, it's been closed for either profit or loss, mostly for profit. We had few trades that we closed early, and those are showing a little bit less profit than usual, but everything is profitable so far here. And we have, I think, 15 trades going on. Let me see, there's a number here that calculates. Yeah, the number here shows 15. So we have 15 trades open at the moment, and 3 of those we put on last week. So we took advantage of that nice down move in the market, although we would put it anyway. We don't really care whether the market is up or down, but it's nice. In hindsight, it's always nice to see that you put some trades on when the market was down. Doesn't mean the market is not going to go down against next week, but at the moment, we always take a look at thinking in terms of right now. What did we do right now? We put some trades on when the market was down. If it goes further down, then hopefully we'll be able to take some trades off, maybe put some new trades on, and continue. So that's on that. Greeks, we have these columns here that are, let me just open it, that are for hedges. And we had a hedge on for a few days, but that one's been taken off because it served its purpose. And I'll talk about that when we go back to the other page, to the platform. But we use these metrics here to normalize the metrics of the portfolios to exclude the hedges influence on the overall Greeks. So since that's now closed, we're gonna just hide this so it doesn't I'm sorry, here, so it doesn't doesn't bother us here. So these are our metrics, and as you can see, as of right now, last night when I took these yesterday when I took these numbers, everything was in green. And so if nothing changes majorly, we can continue to put on some trades because we have room as of right now. Max buying power is around 31%, and we are only using 24. That means we could have around 19 trades, and we only have 15, so that's fine. So we'll take a look at that next week. For right now, let's take a look at the thing here. Now let me take a look at the activity just to see if this ES. Just a second. Let's see ES. There you go. So this was the trade that we opened. Well, let's look at it like this. We opened on the 26th and put it on, and the hedge works like this. If it shows 25% loss, we take it off. It means the market has recovered somewhat. We no longer need the hedge, and we take it off. If the market continues to go down, then we take it off when it shows way more profit. But that didn't happen. We had a nice rally yesterday. The hedge was showing 100 and change. Actually, we keep track here. Let's see. Hedge on demand. So we had it right here. We put in 26. We paid 487 for it, and we took it off for a 352 credit for a total loss of 135, which is roughly 25%. And so that's it. And at the moment, we don't need the hedge on because our metrics are perfectly in line. Delta is at 0.15, which is perfectly fine. Our buying power is low, and there is no need for the hedge at the moment. So, however, if something goes down next week, we have already some small protection. We call them grind down protection, grind down hedges, and those are 3 small put debit spreads in SPY. SPY, of course, moves in the same direction with the same velocity as MES would, so it would react at the same time when the MES is going down. So if we put this, as you can see, a day ago, 10 days ago, 15 days ago, so roughly one per week. These usually work out to 1 small hedge per every 4 to 5 trades, 1-to-1 trades. And like, for example, this one here, as you can see, this one is max profit of, not profit, max value is 24 minus 17, so 700, and we paid for it 121. So these trades are bringing in, if you take a aggregate here, these trades are bringing in around 26 negative deltas. They're also bringing a little bit of negative theta, and the good thing about them is, of course, if the market goes down, the negative delta will increase and give us a little bit more help. And so this is what we have for this so-called grind down protection, and we can book some profits if the market goes down. So that's on that. I don't think well, let's take a look here. So because now we are at a point when let me show you here, when we have a new expiration for the futures, and we're putting, at the moment, we're putting our nakeds in the 83 days, and then our PDSs are in the shorter duration. Let's see, maybe here, and Tasty doesn't let you group them together. So what we do here, we mark them as naked puts 13, 14, and 15, and then in the other one here, we mark them PDS 14, 13, 15. So they go together, so we know which one is what and what happens. As far as our trades are concerned, they're in decent shape. 70% profit on naked puts, 55. So these are the older trades. They are getting closer to their maturity, 50%. And then the newer ones show either less profit or maybe slight loss, which is to be expected. But they have plenty of time to go, so no concern there. And let's see what else. So that's it. Those are our trades. I think next week we'll be putting on some more, so there'll be more there. And then, as usual, our bill here. Now, this bill, it looks like our exposure is slightly too high because I'm getting charged the margin interest. If you look, let me see. Look, no, I'm sorry. if you look at the interest here monthly, and it's in the neighborhood of $42. So that takes out a lot of the dividend interest and dividend received on the bill. So there is a cutoff point where maybe that we are too high, we need to back down a little bit. So we'll see. If this continues, we'll go from maybe 90 to 80, from 80 to 70% of net lick, and lower this exposure, because you need to have some money left for the day-to-day wiggling of the after close futures. They require some cash. So that's all. If you found this video useful, please like and subscribe, and have a fantastic weekend. I'll see you next week.